All right, today we're tackling something pretty fascinating, microfinance. It's this world where tiny loans can have a massive impact. And to really get our heads around it, we're going to zoom in on one company, Arman Financial Services. They're a perfect case study for how you lend money to hundreds of thousands of people in rural India. So yeah, let's get right into it.
So let's just start with a huge question, right? Think about this for a second. How on earth do you build a business that lends money to almost 700,000 people? And not just anyone, people who mostly live and work way outside of the big cities in India. I mean, the scale is just staggering. And the challenges? Well, they're on a whole other level.
Okay, so here's our game plan. We're going to start with the who. Who exactly is Arman serving? Then we'll get into the how, their business model. And of course, the what. What do these loans actually look like? After that, we'll look at the numbers, their performance, and then peek into what the road ahead might hold for them.
All right, first things first, let's dig into the why. Why does a company like Arman even exist? It all comes down to financing India's underserved.
So their whole mission, the heart of what they do, is to provide financial services to folks who are just, well, they're often completely invisible to the big traditional banks. We're talking about your small shop owners, local farmers, laborers in these rural and semi-urban areas, the real backbone of the informal economy.
And let me be clear, this is no small niche operation. We're talking about around 6.8 lakh active customers. And just in case you're not familiar with the term, a lakh is 100,000. So yeah, that's nearly 700,000 people. That is a massive customer base that's really relying on them.
Okay, so that's the big question, isn't it? How in the world do you manage a customer base that's so huge and so spread out? Well, that brings us right to their business blueprint. This is the how. Their secret sauce is really built on a few key ideas that create what you might call a competitive moat, something that protects their business. First off, they do everything in-house. From the moment they find a customer to the day they collect the final payment, it's all them. It's this super high-touch personal approach. You combine that with a laser focus on small loans and a really, really conservative approach to risk, and boom, that's what makes it so hard for others to compete.
So let's break that down a bit for, say, one of their small business loans. It's all about personal connection. Finding new customers, that's literally their team going door to door, talking to people, getting referrals. Approving the loan, that involves physically going to the business, checking things out. And collecting payments, that's all driven by the relationships they've built. It is the exact opposite of some faceless, automated online system.
Okay, quick pause, because we're going to be throwing around a term you need to know. AUM. It stands for Assets Under Management. It sounds complicated, but for a lender like Arman, it's really simple. It's just the total value of all the loans they have out there. As of their last report, Arman's AUM was sitting at about 2,156 crore rupees. And just for perspective, a crore is 10 million. So that's roughly 260 million US dollars. A pretty significant loan book.
All right, so we've got the why and the how covered. So what about the what? What kind of loans are we actually talking about here?
Okay, so if you look at their business, the lion's share, we're talking over 71%, is in microfinance. These are those really small loans, often given to individuals or groups to start something small. The next biggest piece of the pie, about 21%, is loans for MSMEs. That's micro, small, and medium-sized businesses. And then you've got smaller, more niche-y stuff like loans for two-wheelers.
And just look at these numbers. They really tell the story. The average microfinance loan is 50,000 rupees. That's about 600 US dollars. Think about that. Even their loans for small businesses average out to only around 900 bucks. It just hammers home their whole strategy. Small ticket loans, but a whole lot of them. Okay, this is where it all comes together. This is the so what. We've seen their model, we've seen their products, but how's the company actually doing? Let's get into the performance.
So, if we look at that AUM number, the total value of their loans, you'll see something interesting. It's actually been ticking down over the last couple of quarters from its recent high point. And that immediately raises a huge question. Why? What's going on here?
Well, that brings us to the big headline number from their latest report, a pre-tax loss of 11 crore rupees. And, on the surface, you see loss and you think, uh-oh, that's not good. But the story here is actually way more complicated than it looks.
See, the most important thing to ask is why they posted a loss. And it's not because their core business suddenly fell apart. No, it was a direct result of a deliberate strategic decision. They chose to set aside a whopping 67 crore rupees for something called provisions and write-offs. You can basically think of it like this. They're proactively stuffing a bunch of cash into a rainy day fund just in case some of their loans go bad down the road.
And this quote from their own report really lays out why they're being so careful. They're seeing over-leveraging happening out there in the broader market. In simple terms, that just means some people might be in over their heads. They've borrowed too much money from too many different places. So what Arman is doing is pretty smart. They're taking a calculated financial hit right now to shield themselves from that bigger risk in the future.
So they've made this big, proactive, defensive move. The question is, what's next? Where do they go from here? And that brings us to the road ahead.
You know, this is hardly the first storm Arman has had to weather. This company's been around since 1992. They've seen it all, navigated all kinds of economic cycles. And along the way, they've hit some massive growth milestones. I mean, they just raised a ton of capital from big-time investors back in 2023. It really shows they have a long track record of adapting and growing.
And they are not thinking small for the future. Not at all. Their stated goal is to more than double their assets under management from where they are now. They're aiming to grow their loan book to over 5,000 crore rupees. That's a huge ambition.
And that really brings us full circle to the big question hanging over everything. Arman just made a pretty painful but strategic financial move to basically reinforce their foundations while the market gets a little shaky. So with 30 years of history behind them and these huge ambitions in front of them, can they turn this short-term caution into the fuel for their next massive wave of growth? Now that is the billion rupee question, isn't it? Thanks for digging into this with me.